Hey everyone, we're having a chat here with my good friend Krystal from the Rains property. Krystal, thank you so much for being here and making the drive out from the IE. Really appreciate that. And we want to bring you guys an update on current market conditions. There's a lot of stuff going on specifically related to real estate, to mortgage rates. What's the Federal Reserve going to be doing in the next coming month or so? So let's get right into it and just give us your perspective as to what your opinion or what you see in terms of the real estate market currently. But before we even go there, tell us a little bit about yourself, who you are, what you do, and what market you work in.
So we do more than anything residential. We've been working for a while now. My name's Krystal from the Rains Properties. We work anything from Orange County, High Desert, Riverside, you name it. We're all around town. We've been doing it for a few years, and I really enjoy doing what I do. As far as the market right now, there is a lot of confusion. Everybody's kind of going crazy. Nobody knows what's the right answer. But we see a really big boom, Frank, like we were talking about it previously. That's going to be coming up because, as we all know, and as everybody is saying, interest rates are supposed to be dropping in September.
Exactly. Now, one of the misconceptions of rates coming down in September is that historically, and I've been in the business 25 years as a lender the whole time, and I've seen it. I've seen it many.
As long as I've been alive.
That's right. I actually started when I was 12.
No, there you go.
But so I've seen the different cycles, okay? I've seen when the Federal Reserve started cutting them back in 2000, and then they started increasing, then back down again, then back up, now back down. So anyway, the reason I share that with you is what I've seen, and if you do the research on it, you'll see that it is valid, that mortgage rates always move in anticipation of what the Federal Reserve is going to do.
Right.
Mortgage rates don't drop the day that you hear on CNN, the Federal Reserve cut the rates 0.5% or 0.25%. Mortgage rates drop by 0.5%. It does not work that way, okay? Right now, this week, these last couple weeks, we've seen mortgage rates come down, okay? This week, I actually locked a few people in on an FHA loan at 5.25%. I hadn't seen 5.25% in a long time. Now, I had seen it, I'll be honest, with some builders out there that are offering these crazy incentives. But obviously, you and I know that it's built into the home price.
Exactly.
Right?
You don't get it for free.
Exactly.
Right.
But talking about mainstream interest rates, for the longest time, we were in the 6s and in the 7s. Remember that? Okay. But recently, again, the last couple 2-3 weeks, now we're seeing rates in the 5s. Yeah. So I guess the moral of the story, or the conclusion where I'm going with this, is now is the time to purchase and lock in the best rate possible. Okay. Now talk to us about the market now in terms of negotiations, in terms of inventory, and what to do now as a home buyer or even a home seller.
In terms of negotiation, we're at a point where you can actually negotiate. We're expecting when rates drop, if they drop anywhere below 6, it's going to be a boom.
Remember, the rates are already low now.
But they're going to even lower even more.
Possibly.
You can only imagine possibly. We have to add that possibly in there.
Yeah. Short-term rates,
exactly.
It's a given. Those are going to drop. Whatever the Federal Reserve says, if they say the Federal Reserve dropped 0.5 point,
yes,
your credit cards, your auto loans, your lines of credit, your short-term rates are the ones that are going to be directly impacted.
Exactly.
Mortgage rates are going to move ahead of time.
But what's going to happen when that happens is everybody that's been waiting on the sidelines, which a lot of people have been waiting on the sidelines, they've been waiting to say, you know, when we're
thousands,
then I'll take the action. Thousands of people have been waiting. What are they going to do? They're going to jump into the market and then
jump on the bandwagon.
Get the same thing that we got, 1-2 years ago?
Yep.
Where we were getting 60 offers, even 60 offers in one house. You literally would try to make an appointment to go see a house.
I remember.
And then the agent would be like, no, sorry, we've had like 60 offers. We're not even taking any more offers anymore. So it's going to get to that point.
So hold on. You didn't finish that off. So 50 or 60 offers on a home, but what was the winning offer?
It was seeing $20,000, $40,000, $60,000 over. It was insane. It was literally insane. You would call and you would ask. And you're considering that that's above what the house is actually worth. That's just to actually be able to get the house.
To win the bid.
To win the bid. It's what it was.
Yeah.
It was an auction.
Yep.
And it was insane. And we're thinking, I mean, if everything's going the way that it's heading towards,
Yep.
people are saying it's going to be the same thing.
Absolutely.
So right now we're able to negotiate for you as far as maybe a little bit of closing costs here and there, or something that's wrong with the house that the seller might be able to fix. In another situation, if there's obviously 60 people waiting in line for that same house, the seller is not going to want to.
I'll tell you what, I've got 17 escrows going right now, and out of those 17 escrows, probably 14 or 15 have a seller credit.
Yeah.
Right
you're able to
now.
negotiate something for your client.
Okay. A little while ago, I reached out in preparation for this call. I reached out to my local title rep.
Right.
He happens to work in the Inland Empire, Riverside County, San Bernardino County. And I asked him, hey, what's the situation right now with inventory, with days on market on the properties? And he goes, you know what? Inventory's slightly up.
Yeah.
Okay.
It's a little bit.
Inventory slightly up, and properties are taking a little longer on the market. And I said, well, why do you think that is? What is that attributed to? And he said exactly what you said. The general consensus is that people are on the fence, waiting for September, waiting to hear the announcement of the Federal Reserve, not realizing that the time is now.
Exactly.
So again, I want you to elaborate from a real estate perspective, from an agent perspective, what people need to know about that. The importance of the timing.
You get on timing. That's exactly what you said right now. Timing is very essential in real estate, and it's one of the things that if you get it right, you're going to be saving yourself a whole lot of money. Because at the end of the day, you can negotiate a rate. You could refinance. You could, if you have it at 7. What are people?
Marry the house, date the rate.
Date the rate. And a lot of people, when rates were super high, they were saying, no, well, rates are super, super high. Other people were saying, well, yeah, but I can refinance once they go down again. We've seen it. Even refinances are going up. The percentage of people that are considering a refinance are going up.
2023 rates were in the 7s. Okay. Every transaction I did was for a seasoned home buyer.
Right.
It was their 3rd, 4th, 5th, 7th property. So they were like, I'm not worried about the rate.
They know how
doesn't
the
faze
market
me.
works. Exactly.
I'm getting this property 10% above market value or 15%.
Exactly.
I don't care about the rate. You can just refi me, Frank. You got all my docs. I'm in your system. I've been working with you for 10 years. Just refi me. Just let me know when the rate comes down. And that's exactly what we did.
For $60,000 over, how are you going to... You can't refinance that. That's it. You can.
Heck no.
$60,000 over.
You're negative.
You're done.
You're underwater now.
Exactly.
Yeah. Okay, great. Great points there of the importance of realizing what the market is doing right now. Now, another thing we were talking about earlier is special, unique, niche programs for those people, maybe more savvy individuals, maybe more experienced. Okay, maybe I shouldn't use the word savvy, more experienced, seasoned. There's a lot of niche programs right now, probably more than I've ever seen, believe it or not, to help self-employed entrepreneurs, investors.
Right.
Okay, we were talking earlier about one example is the DSCR loan. Okay, DSCR loan. If you want to share maybe your experience or your perspective on who can take advantage of this type of loan. Okay, perfect. So with the DSCR loan is basically when the down payment is at least 25, 30% down, there's basically no tax returns required. Okay, there's banks out there that'll do it down to like a 620 credit score. So you don't even need perfect credit.
Which is actually a really big misconception that a lot of people think.
Exactly.
Qualify for certain programs.
Especially when you're talking about an investment property. Okay, because when we talk about investment properties, we're talking about individuals who already have properties.
Yes. So you would expect
a 700 credit score requirement or all these additional requirements, but it's actually the opposite.
Yeah.
Okay, because number one, it's an investment property. The down payment is right, 25 or 30% down, so it's less exposure for the lender.
Right.
And there's an appetite for that type of loan, therefore making it very abundant in the marketplace.
Exactly.
Okay, so a good fair share of those loans that I'm doing right now, those transactions are investor loans under these programs.
Talk to you about, actually, sorry to interrupt you before I forget, because I have the memory of a... So one of the things I want to ask you, and that's because we've been getting a lot of clients that have that question. A lot of people have a rate of 2.75, like we saw years ago where it dropped and it was just crazy. They have that rate. They don't want to let go of it. Completely understandable. I wouldn't want to let go of it either.
Sure.
What situation or what can you do or what program do you have or how would that work if they're maybe an expanding family and they had a 3-bedroom and now they wanted something bigger, but they don't want to let go of that interest rate because they know it's a good deal and they know they're most likely not going to be able to get it. Maybe again they will, but just not, in the next year or 2 years.
Sure. And that's a very common question. Okay. A lot of common question, something we encounter on a daily basis. And really there's 2 options there or 2 ways, 2 avenues. Okay. One of the avenues is obviously turning the existing home into a rental. Okay. Don't touch it. Okay. Leave it as is. And assuming, okay, here's the caveat. Assuming that the property that's being purchased is superior. Okay, you mentioned an expanding family, a growing family.
Exactly.
That tells me more square footage, more bedrooms, bigger yard, bigger lot, bigger superior home. That's perfect. So that justifies getting another first-time buyer type of mortgage. Okay. So let's say they bought or they refied because they refied in the pandemic.
Yeah.
So they got a 2.75 on a conventional mortgage. So that individual can now go out and buy a home with 3.5 down.
And that's a great option.
Okay. If they're in the Inland Empire, Riverside County, San Bernardino County, that's a home of the high 6s.
Right.
If they're Orange County and LA, talking about $1 million.
Yeah.
With 3.5 down.
Yeah.
Okay, even though you already have a home.
Yeah.
Okay, so that's a very good question and a very common misconception.
Yes.
Any other questions you got for me?
We're doing this as we go. So for me, that's one of the biggest concerns. Another concern that a lot of people are having is as far as if I'm thinking to maybe buy as an investment, what options do I have to buy as an investment? Maybe I don't want to live at the property or maybe I don't. Another program you were telling me about that I'm actually very interested in is one where you told me that it's based off of the rent around the area.
Correct. So that's the DSCR investor program. So with the DSCR program, there's no tax returns required. Like I said earlier, the minimum credit score is at least a 620. Okay.
It's not high at all.
But they do have to come in with 25 or 30% down. Now, the bank is going to look at the rental comparables in the area to make the decision on the loan.
Right.
Okay. There's what they call a debt service ratio. Okay. Which is a calculation where you compare the gross rent compared to what the proposed payment's going to be. That gives you a ratio.
Okay.
Okay. Now there are going to be scenarios where the rent is going to be super low for whatever reason. Maybe Section 8, maybe tenants that have been there for 30 years that are paying very, very low market rents. That's okay.
Right.
Because within that DSCR program, there's a feature called a no ratio. Okay. So regardless of what the rental income is, we can still get that individual financed.
Okay.
Okay.
So it's doable, completely doable.
Very doable. Very doable. So plenty of loans for investors. Self-employed.
Self-employed is a huge one that we always get a lot of questions.
Self-employed is huge. Okay. I've been preaching the whole self-employed thing for the last couple of years and have been very successful with it.
And I think especially we work with 99% of our Latino community. A lot of them are actually becoming self-employed. They have their own companies.
100%.
When they're selling
tacos or corn on the cob or whatever it is.
Construction companies. Or that we have a lot of clients who are working in construction. Now they're actually, they have a construction company.
So check this out. During the pandemic, actually a new economic term emerged. And that economic term is the gig economy.
Okay.
Have you heard of that before?
I have not.
Okay, well, it's a common term being thrown around by different economists, okay, as a result of the pandemic.
Okay.
What that means is that during the pandemic, people doing gigs evolved. Musicians, catering, this and that. So that there's actually a term for it now.
Oh, wow.
The gig economy that was born during the pandemic. Yeah. But guess what? Now all those hundreds of thousands of individuals had to file taxes.
Exactly.
Okay, because they generated all this income from these different sources, and guess what? If they've got a decent tax preparer, they're not going to show, I mean,
No.
a whole ton of
Percent,
income.
everything.
They're going to show a lot of deductions.
Exactly.
Why? Because who wants to pay Uncle Sam more than you don't need to, or everything that you're making, right? So that's the dilemma all those individuals are in, okay? But we've got the solution for it.
We have a program for you.
Correct. Specially tailored for self-employed. Okay. Along those same lines, and something I think worth mentioning is lenders are starting to open up to individuals in the cannabis industry.
Right.
Okay.
You're mentioning that as well.
For a long
Which is
time.
a very big industry, and it's going to
Huge.
Yeah.
For a long time, it was a big no. Now we've got access to one bank so far. One bank. It's promising.
It's allowing it.
Yeah. And they're providing 85% financing, so 15% down for anyone. Obviously, they need to document their income. Okay, they need to document their income, but they'll lend up to 85% of the purchase price, up to like $5 million.
That's a great option.
That's huge.
Yeah, huge.
Okay.
Now, as far as you mentioned this one, now as far as another one, for example, if you're a business owner, like we were mentioning, and you don't present everything in your taxes, or like you mentioned, deductible. Do you have something, or is there a program that we can use where you can still purchase a home?
Absolutely. So that program is called a profit and loss program, okay, where you don't show your tax returns, okay. I'll work with the individual's tax preparer.
Correct.
And prepare a profit and loss statement. And the qualification is done based on the borrower prepared profit and loss statement.
What is the down payment like that?
20%.
20%.
20%
And
down.
a FICO, what does a FICO have to look?
On that program, somewhere in the high sixes, 660, 680.
But it's a great option because,
Okay.
I mean, you're not paying all that money. You have to basically balance it out.
I can't tell you how many conversations I have every single day.
Yeah.
Okay. From self-employed individuals who get referred to me because they saw one of my videos or a conversation or whatever the case may be. And they're like, oh my God, I wish somebody would have told me this. I just filed my 2023 taxes.
Yeah.
Do you know how much I just paid them, Frank?
Even more money than
Because my
Did not know.
CPA, I told him I wanted to buy a house. So he said, oh, you want to buy a house, Mr. Smith? Okay, well, you need to get rid of all these deductions and show more income, or whatever it takes. But now they're out $50,000, $60,000 that they could have used toward their down payment.
I think that's why it's so important to just acknowledge and let people know to ask. It's just really important
Yes.
to ask. You never know. There's a lot of programs. I think now we were mentioning now more than ever, there's so many programs out there
Yep.
for self-employed, exactly like you said, for the business, the cannabis business.
Entrepreneurs.
There's so many options that you could go. You just have to reach out and ask because you never know. Like you said,
Yep.
you could be wasting so much money, for example, in your taxes, paying Uncle Sam, when you don't have to be doing that. You can invest that towards a house.
These programs that I'm talking about are considered non-QM, okay? QM stands for qualified mortgage. A qualified mortgage is your standard FHA, VA, conventional, okay? That's your standard inside the box qualified mortgage. Everything I've been talking about here is non-qualified mortgage, okay? That's where the opportunity lies. That's where the opportunity lies for the self-employed individual to purchase their first home, where the opportunity lies for the investor to capitalize if they've got $1 million sitting there and they don't know what to do or they feel they can't qualify. You can buy investment properties up to 4 units with no tax returns.
That's an excellent option. Yeah. And I don't think how long has that been around for? Because it was kind of unheard of.
Not very long. Not very long. So non-QM loans started to take off in 2019 and then they died out in 2020 because of the pandemic. Investors pulled out of non-QM.
Right.
And now since 2021 to now, it's just been on an upward trend.
Right. We're seeing people that even ITIN numbers, we were just talking about that too earlier today.
ITIN loans are considered non-QM loans.
And ITIN, it's a great option because very few years ago, people thought you just can't buy. There's no
Correct.
way I'm going to be able to buy.
Yep.
So tell us a little bit about that one.
So for anybody out there who's got an ITIN, basically they need to have, number one, an ITIN.
Right.
They don't necessarily need to have credit, okay? It's great if they have credit history under the ITIN and a FICO score is being generated.
But not completely necessary.
That's a plus, but it's not necessary. The difference, or where it comes into play, is the down payment. Obviously, if there's a credit score that's being reported and the credit score is, let's say, 660 and above, then you're going to get away with 20% down.
Right.
If not, then 30% down is going to be the rule of thumb.
Okay, but it's there.
But it's definitely doable.
Yeah.
Yep. And so if here's the double whammy. If they're self-employed,
That's what I was about to mention.
so if they're self-employed and ITIN, it is possible.
And it's still doable. It's a great option.
30% down,
% down. But
but it's doable.
you get to make the American dream come true of being a homeowner here.
Absolutely. And on that same note, something we haven't even talked about, but I'll bring it up because it's important, is for foreign nationals.
Okay.
I don't know if you've ever encountered foreign nationals yourself.
Personally, no.
Okay. But now, after having this conversation, I think it'll open your eyes to opportunities, right?
Right.
With foreign nationals, we can lend to people that live, let's say, in Mexico, okay. That want to invest in a second home or an investment property in the U.S.
Oh, that's great.
They can do so.
Right.
30% down,
Okay.
good rates, and it's really pretty easy to qualify.
I did not know about that one, actually.
Foreign national. For Canadians, here in our market here, a lot of Canadians purchasing in the U.S., a lot of Mexican nationals, South America, Central America, but it is a possibility.
Oh, nice. Good to know.
So keep that in mind. And they do not need to have, obviously, employment here because we're going to qualify them based on their financials from their country of origin. Because remember, it's either a second home
Right.
or an investment property.
That's a great option because a lot of people are looking to, maybe they come into town to do business or something.
100%.
As an investment.
Or what I've personally seen, as you know, unfortunately, there's certain situations going on in certain parts of Mexico,
Yeah.
and these are business people,
Right.
okay, that are leaving Dodge or whatever town they're from, selling properties, and they're looking to reinvest.
Yeah,
And
exactly.
where are they
It's a great
coming?
option.
And where are they coming? To the U.S.
Yes, that would be a great option.
Keep that in mind.
Yes, will do. Well, I
Anything
think you
else?
touched a lot of bases, Frank. As far as my questions, I think you answered most of them.
We talked about interest rates, programs. We can talk about the importance of who you work with.
That's very important, especially right now and what we expect with the market that's coming up. I think it's going to be very important to know who's representing you and who's going to be negotiating for you, because you're actually going to start really negotiating right now with how we expect things to go.
What's your understanding of this new buyer's agreement?
Buyer's agreement is going to be, it's not complicated. It's a very, very big change because it's a huge change. For years and years, the person that has been paying the commissions for both agents, for the buyer's agent, seller's agent, was always the seller.
Correct.
As we know it. So now things changed a
It
little
was
bit.
customary.
With almost 95% of the time, that's what we were used to seeing. Now what we're seeing, and what's the new rule and what we have to do, is that the buyer has to pay the commission for their own agent, which is going to be a little bit hard if you're a first-time home buyer, because a lot of the first-time home buyers, like, it's understandable, they don't have a lot of money to play with. So that's going to be where you have to really negotiate, and who's representing you matters a lot, because that's where we come in and we say, okay, look, you don't have, obviously, and you don't have all the commission to pay me, but we can negotiate it with the seller and see if they can come in with maybe one point, you do the other point, or you figure out, and that's where we start negotiating. So it's going to be very important.
One of the, on a positive note about this whole change with the buyer's agreement and the buyer paying the commissions, is that on the lending side, especially with FHA loans, there haven't been any changes to the amount of concessions that are allowed from the seller.
Because as far as I know, it's still 6%, correct?
6%
Yes.
concessions.
Yes.
Concessions and what they mean and how they come into play with this new change
How they're gonna affect.
with the buyer's commissions. So the good news is that, for example, with first-time buyers, you mentioned first-time buyers, that those are possibly going to be impacted the most. The good news is that, for example, with FHA still allows 6% seller concessions. So what that means is you as the agent can negotiate and negotiate a credit of up to 6% to cover the buyer's commission and maybe even some closing costs.
Exactly.
Okay, so this brings me to my next point. Who you work with really, really, really matters
It does.
now more than ever.
Now more than ever, and also in this exact moment, because I know that's what we were just talking about previously to that, is right now we're able to negotiate a lot of the stuff with sellers. If things go the way that we're thinking that they're going to get to a point.
You mean when?
When they get to a point, it's just a matter of time. So
Yep.
it's when they do get to that point, I don't think it's going to be possible if you have 60 offers waiting for you and you're a seller. Just put yourself in a seller's shoes. You have 60 offers, with $60,000 offering on top of the price of the home, you're most likely not going to want to negotiate or give up any concessions to a buyer because obviously you're in a favorable position. So I think right now is actually a great moment to get into that and actually be able to negotiate and have your agent negotiate for you things like concessions.
100%.
Helping you pay either the commission or the commission and some closing costs.
100%. I mean, I think we're all guilty of, we're always waiting for that right time.
Right.
The right time to buy a car, the right time to buy a house. But if you really do your due diligence, you really look at the market, you take into consideration the Federal Reserve, the interest rates, the jobless report that just came out a couple of weeks ago, the elections, the amount of inventory, everything points to properties continuing to go up. So don't wait any longer. This is the time. This is your window of opportunity. Literally, these next 30, 45 days
are huge.
Are going to be that prime time to get yourself in that zone of where you get the ideal price and you're still able to negotiate to some degree.
And I think it's really important that we also touch the base of just getting your foot in the door. If you're thinking or you've been thinking about buying for the last 2-3 years, we have people that we've even shown homes to, 2 years ago, 3 years ago, and they were like, no, because they're saying that prices are going to drop. And they've been waiting for 4 or 5 years, and they're still waiting on the sidelines. And then we had a client call me the other day, 2 weeks ago, and she says, we want to qualify again. So we qualified her again. She doesn't qualify for what she used to qualify. So she was looking in the Ontario area. Back when we were showing her home, she was still able to get something very, very well around $550 in Ontario. So it was years ago. Now you don't really find something that amazing and good looking in a 4-bedroom at all in Ontario. So I think it's really important to just get your foot in the door. Maybe it's not going to be the house of your dreams to initiate with and to start with. Maybe it's not going to be that house that you want, on top of in Chino Hills and 5-bedroom with a pool. But if you start with a starter home, it's going to be a great option for you to eventually make that jump to a second home. And then later in a few years, make that jump to the house that you actually want to stay with. The point is actually beginning and taking that first step because that's going to basically change everything.
Awesome.
And this moment is a very, very good moment to do it.
Now, just to wrap things up here real quick, why would someone choose Krystal to represent them, whether it's a buy side or a selling side of a property?
Well, because my last name's Rain. I'm just kidding.
You make it rain?
I make it rain. I make it happen. No, I think because we love our job and we're very, very big on helping our clients for many, many years to come. We look at it as a job that I want to be doing for the rest of my life. It's a family business, so I work with my mom. She's been doing it for a lot of years too. I hopefully one day get to see any children that I have benefit from this and benefit from what we're doing right now. So we take care of our client, not just if you bought a home last year, we take care of you, whether it's 5 years down the road, 10 years down the road, we help you reach your goal. If your goal is to maybe buy a starter home and then eventually build up to a second home, we are looking out for you. We're actually looking to see where it's a great option for you to buy. We show you samples. We do market analysis. We ask you questions and we get to know what it is that you're looking for. And we want to do this for many, many generations to come. So we really take care of our clients and we really look out for them.
That's awesome. Well, thanks again. Thank you so much for coming out. Really appreciate that. Enjoyed the conversation and looking forward to the next one.
Thank you.
Thank you.